Ryan, let me start with you. Just these headlines we got yesterday certainly caused some very rapid, in some cases dramatic moves from this jury in Missouri. What did you make of those headlines and what it means for the universe of stocks you cover?
Yeah, thanks for having me. I think for us, it wasn't a surprising announcement. This has been a storyline that has been unfolding for the last several years. The issue at hand here is how commissions are set and paid. And we think that the writing is on the wall around the scrutiny that the industry is currently facing, that ultimately that structure is going to change. And the ruling we got yesterday aligns with that thesis that ultimately this scrutiny is going to reshape the housing structure as we know it.
And Logan, so how is it going to reshape? I think we're all trying to figure out what this ruling means, how long it's going to take for anything to change. What do we know right now in the wake of it?
Well, we're going to see a lot more lawsuits come into play, and that's probably going to confuse people even more. But, the days of buyers actually getting a free ride into buying a home because the seller would actually pay their costs is over in a sense. But you have to look at the Zillows and the Redfins. If there's going to be less income made by the real estate industry, which is already in a recession because existing home sales are low, does that impact their business in the future going out? Or does a Zillow and a Redfin find a way to establish kind of a new marketplace where they can be the facilitator to buyers going into the marketplace? So right now it's a very unknown, but the headlines are going to be about the lawsuits coming out. Until you get some clarity and cost there, this will be a cloud around the real estate industry. And then after that, we'll see what happens when new regulations come in and how the sector will operate with those new rules.
And Ryan, Logan brings up a good point. It's a lawsuit. There's going to be an appeal. This will go on for years. We know this. But, I do think investors already begin to think about risks, long-term investors at least. Are there certain business models that would be more at risk if this really becomes law?
Yeah, we've called out a few different types of business models as being beneficiaries and potentially at risk from how this could play out. The most obvious players who are at the epicenter of this scrutiny are the players that are directly tied to that commission pool that we think could see significant pressure upwards of potentially 30% over time. So that involves, the traditional residential brokerages, but also you have players whose business models are directly tied to that commission pool in other ways, which would include some of the legacy first generation lead generation portals like a Zillow or a realtor.com, whose revenue models are directly tied to the buy side agent commission. On the flip side of that, we think that one interesting story that could be a significant beneficiary from all of this chaos and restructuring is CoStar, which is a dominant player in the commercial and multifamily markets, but has been expanding very rapidly into the residential for sale market. They have a new brand that they've been investing hundreds of millions of dollars behind called homes.com. That is really the only portal out there today of scale that is exclusively focused on advertising homes and providing digital advertising services for listing agents. In a new world where home sellers are no longer incentivized to compensate buyers' agents, you could argue that they have a lot more flexibility to reallocate that advertising spend, which is otherwise known as the buyer agent commission, to these other models. So CoStar, we think, is set up well to benefit from the unlocking of that significantly under-monetized advertising TAM for housing in the U.S.
Ryan, how quickly or easily would some of the other players be able to pivot in that direction?
Look, there's some great brands out there in the market. Consumer eyeballs are ultimately the ones that drive the success of these businesses. Brands like Zillow and realtor.com certainly can leverage those brands to continue to operate in a new market structure. I think there's some question around the swiftness with which those business models can pivot and the risk that a pivot poses to the existing revenue streams, which in certain cases could be cannibalized as these companies try to stand up an alternative type of advertising model that can thrive in this new market. So that will take time, and it will really depend on how quickly these management teams decide to respond to this new structure.
And Logan, I'm also thinking a settlement could still be a possibility. Is there a settlement that you think could make all the parties happy here?
Probably not make all the parties happy, but for me, what I'm looking forward in the next year or two is, can a Zillow or a Redfin or a realtor.com facilitate a kind of a low fee for the buyer to provide the services for them to be part of the negotiation? And will regulations allow that to be kind of tied into the mortgages to make it a little bit more fluid situation? Right now, there's just so many questions out with the lawsuits and who's going to get impacted or who's going to make a deal. But looking ahead, there's opportunity here for somebody to step up. And of course, while all the chaos is going in, to me right now, the people that are putting their game plan into motion will benefit in about a year or two.
Logan, and just quickly, are consumers ultimately going to benefit from this? Are they going to be paying less as a result of this?
Well, if you're a seller, you're obviously going to be paying less. As a buyer, the kind of free ride is over. You are always getting your payment paid by the seller, so that's gone. So the consumer will get hit on the buyer side. On the seller side, of course, you're going to keep more of your what you sell your house for after the mortgage is paid off.